Interesting facts to start our next trading day. Very strong selling that put the SPX at a 20-day low while above the 200 moving average suggests an upside edge. An extremely weak closing tick suggests an up day on Wednesday. An unfilled gap down right after an unfilled gap up can suggest short-term problems for the bulls. And last, multiple big down days after a high does not necessarily lead to a bearish market. Indeed, if you look at the last 15 years, when you had two very large losses in the past 3 days, with the S&P recently at a 52-week high, many times it continued to be bullish. Sometimes, of course, it did fall down, but this is not necessarily a sign that the market is about to roll over into a major correction. So, where does that put us for today? Hello, this is Stephen Harris. I'm a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:59 a.m. Central Time, and I am recording this in preparation for the market day of March the 11th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see what happened in the overnight action. Well, first of all, our 4 broad market indices are all up, and anywhere from about 0.35 up to almost a half a percentage. Actually, the S&P is the strongest market as of the time that this was cut. Crude oil is also up about the same, about 0.5%. Euro continuing to be crushed as it heads towards parity, down towards 1.16%. Bonds down just a little bit, and gold up just a little bit. In the overseas markets, we have China basically scratch, Hong Kong down about 0.75%, Japan up about 0.3%, so mixed Asian markets. European markets up, Germany especially up strong, up 1.72, and the United Kingdom up 0.25. In terms of macroeconomic reports for today, primary, we have 10-year bond auction. And really, that's the only thing I would really draw my attention to, other than for you crude oil traders, you do have your crude oil inventory today. For tomorrow, typical Thursday reports, core retail sales, unemployment, very, very typical Thursday action there. So nothing new. Natural gas, so all the typical Thursday activity. No special monthly reports to speak of. In terms of our volatility situation, we have been ticking up a little bit higher. You look at the historical implied IV percentiles. We're getting up there closer to the middle range across most of these markets, with the exception of the Russell. The Russell's still in the bottom third. We did have a multiple market standard deviation move yesterday, and indeed both the S&P and Russell, this was well over a 1.0. It was closer to 2. You did actually go more than 2 standard deviations on the NASDAQ and the Dow. So quite a bit of volatility has come back into the market in the last 3 trading sessions after really about 2 weeks of very, very, very calm standard deviation type moves. Short-term volatility up to a 16.72, so clearly have been ticking up in our VIX phase. In terms of our regular morning report, we do have Euro contract rolling over this week. The volume is still heavier on the old contract, so not quite yet ready to be converted for intraday trading, but you need to keep an eye on that volume when it goes 50-50. Our market trend intermediate term phase opinion still remains phase 3. We're still looking for higher highs and higher lows, though this can certainly be called in question at this point. We'll see what the next couple days brings. Our portfolio investor posture certainly has had pressure, and IBD status is now uptrend under pressure, and GMI has dropped to a 3 out of 6 with a buy signal still holding on that has been issued since January the 23rd. Active trader market posture has turned bearish. If you look at position sizing opinions, the investor position size opinion buy long side portfolio exposure up to 80%, but do not initiate new bullish positions for short term or intermediate term is the current call. From a volatility base, we're still in that window between 12 and 18, so that still does call for a 75 to 100% of full position size. Market timing opinions, 1-day outlook slightly bullish, 3-day outlook actually is quite bullish. Market forecast opinion has turned bearish with the primary S&P market, the Dow, and the Russell all turning below that 80 threshold and turning bearish. So no new short-term or intermediate-term trades being called for in 3 of the 4 broad market indices. The NASDAQ being the remaining one that is still in a very bullish market posture stance, but it has certainly been fading and could very well cross over and join the other 3 markets with any weakness at all today. Hedge warning status still remains a level 1, and really, you know, we're starting to see a lot more red show up here. Whether you're looking at volatility base, we do have market in decline. This is 2 of the last 3 trading sessions. We've had market in decline warnings. We've had a sharp increase warning come back as well. Distribution days, with yesterday's action, the S&P has now gone to a count of 5. If it goes to 6, we could very well see this threshold level increase from 1 to 2, depending on what else comes into play. We've had a recent lower low, so not great for the intermediate trend. Our New York new high, new low indicator on the 1-month basis, this is certainly a big warning. 40 new highs against 821 new lows. So very, very weak broad market action. In terms of risk on, risk off, risk aversion indicators, it's really 4 to 1 now. 4 of these I would call as risk on or neutral. They've basically been chopping sideways, so not really ready to call those risk off. 1, this S&P and 7-10-year bond ratio has clearly signaled risk off. Our option income strategy opinion still within the acceptable window, so just going to need to be nimble. You might want to be very careful with position sizing given the recent uptick in volatility. Cover call strategies very much agree with this opinion. An equal distribution between in the money and out of the money strikes would be called for in the current market condition. You, of course, have the call to not initiate new short-term or intermediate-term bullish positions. If you are in a position, you might want to take a look at this opinion here. Put selling, we probably are setting up for some very interesting put selling opportunities. If your belief is that this is a pullback within a longer term trend, this could present opportunities to sell puts against the core portfolio basket of stocks that you are willing to own. Make sure your position sizing is in the same context as the amount that you are willing to own. Sector market postures, a lot of red here on the short and intermediate term. Really nothing that is healthy across the board. Consumer discretionary, probably the strongest sector through this recent volatility, and utilities and energy continuing to be the weakest. In terms of sector percent change, indeed utilities actually was down the least yesterday. At the same time, it was still down. So you look at, though, at 1 day, 5 day, 1 month, 3 month, utilities absolutely getting hammered of late. So not a place to be a big time investor unless you are a value buyer and you think that there is opportunity in a longer term time frame. And at the bottom here, look at the looks like the high beta stuff is what got hammered the most. Industrials, financials, technology, all high beta, getting absolutely hammered with the price action yesterday. If you are doing research on your watch list, retail now in top place, railroads, internet, healthcare, transportation, and followed by biotech. I've seen quite a bit of interesting stuff happening in the biotech space, so continue to watch that one as well. So as always, greatly appreciate you liking us on YouTube and your favorite social media platforms. And any questions, support, comments, feedback, support at falconglobaltraders.com. More information is always available on the website falconglobaltraders.com, including about our daily price guides for day traders across 16 key markets. Disclaimers as always, hit the pause button if you need more time to review this. And then, as always, we greatly appreciate you each and every day in the Falcon Global Trading community. Good trading, and we'll see you tomorrow.